welcome to this week's Market Outlook webinar with me, David Jones, and Aondo Markets. If you're watching the recorded version of this, it was held live on Wednesday, November the 15th at 12:30 in the afternoon. So this is a webinar we do every week on a Wednesday lunchtime, and there's two parts to it. We look at the markets, so we look at the euro, pound, major indices like the S&P, the Dow, the FTSE, the DAX, and commodities, gold and oil, just to see really where it's been trading over the last week and some of the levels to look out for, where the opportunities might be in the days ahead. It's been a really volatile morning this morning for the pound. We had employment data out. It's a bit confusing actually. I mean, I think that risk warning's been up for long enough. Let me just have a quick look at the BBC website. So it's a great headline. The workforce sees biggest fall in 2 years. The number of people in workforce, but so does unemployment between July and September. So a little bit of confusion, I think, in the markets today. And you can see it in the volatility. Here we go. If we just bring up, this is pound US dollar. We'll take a bit of a bigger look at this in a second, the bigger picture look. But coming into this morning, it was trading around about 130, 140, ran up above 13200 ahead of the number coming out, fell off a cliff when the number came out, so it gave up, what, 70 points, and has found some stability since then. But interestingly, it has held above the lows for the day, the early morning lows. I think I'm about to have an Amazon delivery, so someone else is taking care of it. So it did hold above those early morning lows. So that was positive. We've seen really big move for the euro as well. So let's just take a step back from this volatility and have a look at the euro first, then we'll come back to the pound. I think it's been interesting, the euro dollar, and I think it's wrong-footed, arguably, plenty of people, including me, because if we go back to what the euro was doing, let's just take a bit of a step out here. So we'd had this trend for euro dollar that had been in place since April. So we had this run that looks something like that. Then we had the break of the trend line, and the break of the trend line for me doesn't necessarily mean it's all coming to an end. You know, we've still got major levels of support around about 116 to round it up, and 116 and a bit of support there. So when it was selling off, I was still expecting the market to bounce back. Then we had a little fiddle through the support here, but the market held and recovered the week before last, and then at the end of the week before last, it went back to where it started the week and pushed lower again last week, so pushed below that low. And you'd often think, okay, well, it's had two goes now at breaking the low, maybe we're going to see it really follow through. But look at what it's done since. I must admit, I wouldn't have been expecting that when it was down at 116. It's now had a big move yesterday. It was up more than 1% yesterday, the euro against the dollar, and we're up here. We're up at 118.45. So this does look like a false breakout, clearly. Now, after the fact, you know, we had these two goes of pushing lower, and it's not going to do it. But I think what's interesting is what happens up here. We've also had the potential for a head and shoulders, which is now looking like a failed head and shoulders for those who are fans of patterns. So I think a lot of people, me included, a bit wrong-footed. So now I'll be looking to be a buyer on weakness, I think. I mean, if we the interesting thing will be if we do go back and test this 116 level again. For euro dollar, you know, do we see it hold this time around? That would be, I think, a pretty good entry. But let's take a look on the hourly chart just to look at some levels to watch. You can see just the size of the move. So we spent a couple of weeks sort of bumbling around sort of 116, pushing below it. There's the first push below it, rallies, pushes back again, and since then, or since yesterday, it really has gone like a rocket. But I think what is interesting, we are back to an area that was a real problem the second week of October. So the setup could be, if you thought, well, actually this euro dollar move is overdone and it's going to go back down again, it's just something of a dead cat bounce. We've got a great level to go short again. So 1880 is the big level for euro dollar. So it'll be interesting to see what happens over the next few days. And actually this ties into what we're talking today about breakouts, but it has been a heck of a move. I think it's quite difficult to get on it if you weren't in already, and a little bit of a, what's that called, a little flag thing there. But 118.80 to 119, the big area to watch for euro dollar. But I must admit, I haven't traded it the last couple of weeks, but I would have been wrong-footed, I think, by these breaks below 116 and then the market turning around 250 points. Pound against the dollar has been a bit more logical. It hasn't really gone anywhere if you look at the bigger picture, pound against the dollar. But this 130 or 130.20, I think, is the absolute level. These old lows from here, they were 130.27. So the lows from early October, we saw the market sell off. Buyers came in ahead at 130. So the market sell off again later in October. Buyers came back in. And just this week, we had a really quite an ugly open for the pound. Well, depending if you were short, it wasn't ugly. But earlier this week, Sunday night trading in Asia trade. Let me just try and flip it over. And it's all to do with all the political shenanigans that we've seen going on over recent days, or over last week. Yeah, we saw Priti Patel resign last week. I think there was the minister, and there was news over the weekend that 40 MPs, at least 40 MPs, don't have any confidence in Theresa May, the UK Prime Minister, blah, blah, blah. So we saw it sell off really heavily in Asia trading, and at one point on Monday, I think it was about 130 points lower pound US dollar than Friday's close. So it was yet again we saw, the political world having an impact on the financial world. So it looks quite dramatic on a short-term chart, but going back to our daily, nothing has changed. And once again we saw this 130 level really hold it up. So for now, if we go back to the recovery the pound has been in this year, that hasn't changed. We are still there. We're still well within that trend. So from a longer-term point of view, any weakness in the pound still looks like a buying opportunity. It's only if we lose, I think, these old June lows around about 126, do we have to think, okay, well, maybe this recovery trend for this year is coming to an end. And on the hourly charts, here we go. Here's the last, the last month or so. It's just been in a real wide sideways range. I would have no interest in trying to trade it here in the middle because it's almost slap bang in the middle of the range. But clearly, if it gets slammed again and gets whacked back down below 131, we want to watch for a reversal ahead of the old lows. And if we start trading up at 133, we want to look at weakness and the buyers to come in. But at wherever it is now, 130, 160, it's really nowhere. It's no man's land. So I still think the bias is on the daily chart for it to rally. For us to get back up to those highs that we saw earlier in September, up above 136. So that would be my target for the next sort of 3 to 4 months or so. But it's really gone nowhere for a month now, but it's been well underpinned by the 130 mark. Let's have a quick look at euro sterling while we're on the old the pound and the euro. Here we go, euro sterling. This has been, again, this is really a politically driven market, I think, at the moment because of the Brexit and all that shenanigans that we all know about that's going on. We saw the highs this year hit for euro sterling about 93, so a euro was worth 93p. This has worked really well, this big level. I know, I always bang on about how important the big levels are, but look at what euro was doing before, euro sterling was doing before that run up into August. It was sort of bibbling around the 87.20 mark. Sells off pretty hard. We lose 500 points or so. But again, 87.20, let's call it 87. 87 holds, the market rallies, comes back down, holds again, and up we are. And now the test is, well, arguably you should go short up here. If we were looking at this on an hourly chart, let's flip it to an hourly chart, we'd be going short into this because we're back to what has been, quite the barrier over the last month. So around about 90.40. I think on euro sterling is a really big level. So again, if you thought, well, actually, again, this euro move is overdone, we've got a good area to go short up here. I think if 90.40 breaks, then we need to change our view a bit, and the risk is we're going to see this crawl its way back up to the sort of 9300 mark. But I think this level has done a fantastic job. 87.20, 8700 on euro sterling, on really propping up the euro on any weakness. But I could be tempted to be a seller, I think, up here with stops above 90.40. Let's see how it goes. Let's take a little break and talk about breakouts, appropriately enough. I'm a fan of trading breakouts on daily charts for shares, but there's no reason why you couldn't use them, you know, for anything really. So what I'm going to do, I'm going to do my usual scribbles here. I'm going to flip the screen over, and which screen am I trying to show? Hold on a second. Screen number 2. Okay, and then bring this up. So the idea behind a breakout is really easy. You know, we've looked at lots of resistance levels and support levels today, but it's Euro sterling, the one we've just been talking about, 90.40. You know, we have a market that's doing that. So let's pretend this is Euro sterling. That's a bit of a cockeyed line. 90.40 is the level, and the breakout is that. You know, we have a level where sentiment has changed. Sellers have come in, too expensive. Sellers have come in, too expensive. Bang, suddenly it's the buyers who have the upper hand. And I think the question always is, how do you trade it? And I mean, there are 3 ways, I think. There are 3 ways we could trade a breakout. And of course, you know, what I'm saying about breakouts to the upside equally applies if we saw a breakout to the downside. So we just turn it on its head. So I think there are a couple of ways of doing this. Let's just take a step back. Oh, hang on. There we go. So we know the level. In this example, Euro sterling, we know 90.40 is the barrier. So maybe the relaxed way of doing it, and the not wanting to miss out way of doing it, is we have an order in to buy, so buy order at, for example, 90.50. So we know where the level is, and we're going to let the market put us in the trade if it breaks out. Okay, so if it does that, bang, we're in, and then we need to think about whacking a stop loss on. So I think that's maybe the simplest way of dealing with a breakout. You either sit there and watch it and buy if it breaks, or you have an order in to trade it if it breaks. That's one way of doing it. Personally, I wouldn't do it that way, but there's no right or wrong way. And if you get a runaway market from it, like, for example, US stock markets have been for the last 12 months, you just keep buying breakouts and clocking up the profits because the market just rockets higher. The other way of doing it is, if you're a bit of a cheapskate like me and you've seen the breakout but you still think you can get in a bit cheaper, if the market does that, pulls back, and then we see a bit of strength. So buy there. So the breakout, you notice the market's broken out, so you think this market is going to move higher, and what you're waiting for is a bit of a pullback, a little drop back, and for the market to turn up again, see a bit of strength. So maybe that's only 1 day of strength, that's a 1-day candle, but you're looking for that and then looking to buy in. So and then for me, I would have my stop loss probably somewhere down there, because if I'm buying into that strength, I'm not expecting it to go too far back into the range. Okay, so that's one way. And maybe the more conservative way, but arguably maybe the purer way of doing it is, so the market breaks out, pulls back, and you actually buy that, the breakout of the previous high following the breakout, if that makes sense, because then you can have a stop loss there. So you can have a stop loss below where it pulled back to. So I think there are 3 different ways of trading it. And of course, again, if we're looking at breakdowns, you know, it'd be something like that. It would be that break there that we trade. The drawback with these last 2 approaches, either buying there or buying there, compared to just buying when it breaks out, is if a market does do that and just rockets away, you're not in. You know, you're not in on the trade. So that's I think the obvious drawback of waiting for some sort of pullback. So that's what I mean. So I do this. So at the moment, for individual S&P shares, I've got, I think, about 15 trades running, and they were basically all flagged up by a breakout. You know, so if we look at an individual share, let's look at something like Facebook, because I think Facebook has recently broken out. So let me try and find the old Facebook doodah. Here we go, Facebook. So if we go on do you need a weekly chart or a daily chart? So just to walk through, you know, some of the principles. I mean, Facebook, like a lot of US stocks, you know, has had a great run. Let's do it on a daily chart. So we'll go back in time and say we were waiting for the last breakout. I mean, there was a breakout. If you look August, so this is last summer. A year last summer, so 2016 we're looking at here. So we had you know, we had a high, the market made a high, Facebook shares made a high, $133 a share. rally back to it. Let's sort of zoom in on that bit. Rally back to it, fails, pushes, fails again, but then breaks out. Whether you class that as a breakout, I don't know. I would. I class it as a breakout. It's moved a couple of dollars through the level. It sells off a little bit, fiddles around, and we see strength coming in. So you'd either be buying on the break of 133.40, in which case you've been on this candle here. You'd be waiting for some sort of pullback, in which case you'd be here, or you'd be waiting for the breakout, the post-breakout high to break, in which case you'd be in here. Okay, but either way, we're putting stops below there. So, and then we have, you know, a similar sort of thing happening here, where we have the shares. I mean, it got a bit messy actually, because so the shares hit a high May 17, sells off, so it goes from 153 down to 144, breaks out. If you'd bought that breakout, if you'd had a stop, you probably would have got stopped out there, you know, because the market broke. Facebook shares broke to fresh all-time highs, but then sell off. They didn't take out the major support, but if you had a tight stop, you'd be taken out. Breaks out again, so maybe you buy again. If you had too tight, and this is the problem, if you have too tight a stop, you will just get, if you're assuming the market is going to take off like a rocket, it does happen, it happened here, but there are a couple of times where it didn't. You know, I do think you need to give breakouts a little bit of wiggle room. And again, just now, just in the last couple of weeks, the reason I flagged this one up is because I think it's an interesting one now for me, because 175 was the previous all-time high from Facebook in July, so $175 a share. Again, we've had a bit of a messy old false breakout going on. So breaks, sets fresh all-time highs, sells off back to 168, but has broken out again. So for me, probably yesterday would be enough to buy in. So if I was buying this breakout now, I'd buy it. Where is it? Where did it end? It ended 177.78 yesterday. So $177.78. The closest I would want my stop is going to be down here below 168. Should have a $10 stop. So what's that? That's about 6-7%, something like that. And then looking or hoping the Facebook share price would carry on moving higher. And with this approach, I mean, if I can talk about this maybe from an experience point of view, because it's something I've used for quite some time. Probably it maybe works 50% of the time. In my experience, in my trading, with my approach, it works 50% of the time. You think, well, okay, that's not very good. But the thing that really makes the big difference is if you have something like Facebook that really gets going. So on some breakouts you'll get stopped out and it will go the way you thought it was going to go. That's unfortunate. On other breakouts they end up being false breakouts, so you get stopped out. That's fair enough. But then it's the ones that really take off that can make all the difference. And I think I may have mentioned these before, but I've got a couple of trades running from a year ago that are still going now that have made all the difference to the P&L of this approach. Just because, is it VeriSign or Verizon? I can't even remember what it is. VeriSign, but trading it on the breakout, you know, because if you catch one and it really gets moving, you know, it can deliver profits that make up for, you know, 4 or 5 losing trades using this approach. Here it is. It's VeriSign. So I bought them. I think I was actually maybe buying on support, but back in, where was it? I think it was maybe back here, maybe I'm exaggerating, back in March, but buying on the breakout really through these old highs at 87, and it's been one that hasn't really looked back, you know, so all I've done is trailed the stop loss up behind it. So as with anything, it doesn't work all the time, but I think it's all about how you manage it when you're in the trade that can make the difference. But I think it's for trading individual shares, of course, with the proviso that it's been a good market the last year because we have seen stock markets go up. You know, I think looking at and flagging up breakouts can be a quick way of filtering stuff that's interesting. Okay, so to go back to that euro sterling chart, the level we'd watch, if we were going to do a breakout trade on that, it's going to be a shorter term trades, but clearly we're going to be watching how it performs at 90.40. You know, so if you don't want to sit there and watch it all day long, just set an alert at 90.40, and if it breaks, you can go and have a look and see if there's a trade there to do. Okay, so that's so euro sterling is interesting. Arguably it's a short up here. Pound against the US dollar, lots of excitement, but no actual progress, to be honest, this week, but plenty of day-to-day volatility. Euro dollar has gone like it's had a rocket put up under it since yesterday, but again, it's getting back to levels that had proved to be in a problem in the past, but is interesting because the move we've seen over the last 4 days does make it look as if this break below 116 was a false one. So it would suggest that maybe a medium-term target is a run back up to these highs at 121. Okay, let's have a look at some other markets. Let's do. I know there are always a few Bitcoin fans up here on here. Let's do the crazy world of Bitcoin. I do still have some. This is another one I use breakout strategies on. I've got 3 trades, and I bought the last lot up here, which wasn't that genius, but bought various bits on the way up when it broke through previous highs. But Bitcoin, it is ridiculous. But we saw last week it nearly touched 8,000, and then on this was on Wednesday night, it nearly touched 8,000, and then on Sunday morning, it was trading at 5,400. Right, it's a lunatic market. Any market that can move, 30% from high to low in 4 days, 5 days, is a crazy market. And I think you've got to be very optimistic if you're looking to trade this thing with really tight stop losses. But it was all to do with this hard fork thing, which I don't really understand. I don't really care. But the news came out, the market thought it was good, and actually, bang. As it turned out, they didn't think it was that good, but now they think it's good again. Bitcoin, again, great trends. What's the target for Bitcoin? It looks to have shaken off this weakness. I think, again, if we can break 8,000, 10,000 has got to be the next target for this one. But an incredibly volatile, crazy, ridiculous market. Let's take a look at something a bit more sensible. US stock markets have got, I think, a bit more interesting over recent days. I've been bemoaning the fact for weeks now that all these markets do is go up, which is great, for our pensions and stuff like that, but it's pretty boring from a trading point of view. The VIX, the volatility index, has been making record lows because we just have a lack of volatility, and the market might sell off for a couple of days and then bang, off it goes. What's interesting going into this afternoon for the US market, so this is the S&P 500. Don't get me wrong, that major trend from the US election last year is still very much up. It would take a fall through at least 2,500 to suggest that 1 year trend is in trouble for the S&P. But I think what's interesting going into this afternoon, because normally whenever the market goes back to previous lows, the low from the day before or the low from a couple of days ago, we see the market spike up. Just look, and I know I bang on about this every week, but look how well, trading previous lows just through November would have done you. Okay, so the market, November the 9th, sells off to this previous low from November the 2nd, 2565 on the S&P, and the market rallies 20 points. Sells off again, is that yesterday? Yesterday afternoon. Sells off, and the market rallies 15 points. So there's actually a trade now. If we think the same thing's going to happen again, and I'd suggest that at the moment there's no reason to believe that's not the case. We could be a buyer now. Where is it now? 25.69 and a bit, with a stop loss underneath the overnight low. What will be interesting is if this afternoon we actually do move below that overnight low of nearly 63-ish. We could see a bit more weakness, but we do have, again, really big levels, as you can see all the way back here. What a good job 25.44 had done of propping the market up. So I think it's interesting because we haven't seen it snap back quite so quickly over the last couple of days. Plenty of people think the market is overvalued, but the market carries on going up. So I think that's going to be a really interesting one to watch this afternoon, sort of 25.63. On the S&P, but at the moment, if someone put a gun to my head, it would be a buyer, because this market just defies gravity. The DAX, the German 30, has been pretty volatile. So the DAX, so a quick look at that on the dailies. It's really been, that really is a violent move over the last week or so. It's gone from, where are we up here? 13,500. It's currently traded, touched 12,850 today. Again, an aggressive trade would be to be a buyer here. I maybe wouldn't want to do it myself just yet, but we have the old highs. So we're getting at a breakout. This is a breakout trade to the old highs. Runs up 600 points, comes back down. So it's sort of from a classic textbook point of view, we'll be expecting some buyers to come back in here for the DAX. Maybe you want to wait for a day where it's not falling off a cliff like it is at the moment. But I think, again, it's interesting here. Obviously, if we see US markets fall this afternoon, we won't be seeing any bounce in the DAX anytime soon. But I think it's an interesting one to watch today and tomorrow, because from a theoretical point of view, we should see some support coming in here. I think if we push much below 12,800, we're going to see a much deeper pullback, maybe towards 12,500 initially. So lots going on, plenty of volatility. And a quick look at the FTSE, quick look at the FTSE 100, and then we'll look at gold and oil. It's interesting this. I mentioned this over recent weeks, that the FTSE was really underperforming the German index and the US markets. You know, and we had these old highs at 7,600. I think I said a couple of times. Not that I actually did it. If you want to go short anywhere, you know, this was the place to go short. And we have, yet again, the FTSE's failed to break through and set for fresh all-time highs. Still looks pretty weak. You know, it's dropped back, what, a couple of 100 points from those recent highs. But lots of support coming in from sort of 7.1 through to 7.2 for the FTSE. So maybe a bit further to go on the downside, but not necessarily time to get the tin hats and the crash helmets out just yet. Let's see what happens down here. But quite a turnaround yet again off these highs from June of this year. Now, two last markets going to be gold and the price of oil. I'm sure we've all noticed the price of petrol has started creeping up at the pumps, and we have oil up at, well, currently up at $55 a barrel, but has touched 58 in the last week and a half. I did think it would be here a lot sooner. I think at the beginning of the year, I was expecting it to be sort of pushing up there. But we've had this really volatile year, but there's this trend that has been in place now off these lows. The June lows still very much intact. Any weakness for the price of oil at the moment, going back to these June levels, these June lows, you know, we're in a 5-month trend now for the price of oil. Any weakness looks like a buying opportunity. I think, again, you know, even if it's down at $50, even if it drops 10%, it's still within that overall trend for this year. Let's take a quick look on the hourlies, on the hourly chart, see if we can pick up any levels. So it has sort of lurched a bit lower over the last couple of days, but we do have a big level coming in, if I can find it, on the hourlies, you know, running from 53.60 through to 54 and arguably through to 54.40. So we are sitting above support. So if you thought it was going to go up to 60 from here, it's a good trade. You know, you've got stops maybe at 53.20. So we have a $2 stop. It's not a fantastic risk reward, but $2 stop and maybe $5 upside from here. It's not terrible. We do have the oil inventories out this afternoon, so that can often see quite a bit of volatility for the oil price. But I think for now, even though it has slid about $3 over the last week or so, you know, it really doesn't change that bigger picture of that trend that's been in place since June. And then finally, the price of gold. I think the dollar has been taking, you know, with the strength we've seen in the euro, the dollar has been taking a little bit of a, not a pasting, but been under a bit of pressure over recent days. And, you know, gold traditionally moves inverse to the dollar. I think we were looking at this in recent weeks, just looking at these old lows from back here at around about 1260. We'd had that trend in place where it broken, come down for the retest. So at the moment, it's pretty textbook. You know, we've had the price of gold slide down to 1260, rally up to above 1300, come back down again, 1260 holds, and we're seeing the strength come back. So for me, it still ties in with this whole trend really for this year. It's been a bit of a messy one, but for now at least, I think I'd expect it to hit 1360 rather than 1200. So if it was a coin flip from here, I think it's more likely to go up $80 than go down $80. You know, so because we've broken out of here. So we'll see. I think so. For me, the expectation would be for at least a move back over, I don't know, in the next couple of months or so, 2 or 3 months, back up to these old highs at 1360 and maybe out to fresh highs. And I think it's only if we start to lose these big old supports from back here does the argument that gold over recent years has finally turned the corner start to fall apart. So for now, that still looks pretty bullish. So that's it. I think we'll wrap things up there. I think that there's lots to watch. I mean, that euro sterling, to take the dollar out of the equation, euro against the pound is an interesting one, because we're up at these levels, up at 90.40. Well, 90.40 is the resistance barrier. That's an interesting one to watch. US stock markets this afternoon, because it's well overdue a correction, but it's been well overdue a correction for most of this year, and it keeps going up. But I think it's going to be an interesting one to watch this afternoon to see if it does snap back again. And so far, it's spiked a bit lower overnight, the S&P, but it has held. So I think there's a couple of immediate ones to watch there, and the pound at the moment is just all a little bit boring. That's it for this week. I hope you find it useful. Thanks for coming along, as ever. We'll do it all again next Wednesday, and I think you get an automatic link to the recording after about an hour or two if you want to watch anything again. But we'll wrap things up there. Thanks for coming along, and do it all again next week.